Hey guys, it's Steve Lamothe, the founder at Elevate Realty Group, and we are almost to the end of the year. I cannot believe it. We're in mid-November. Just a reminder, if you haven't signed up for our pie giveaway, this is our annual event. We've been doing it for 7 years now. Make sure to check your email. We'll send out another reminder so you can reserve your pie from Lindsay at Say Pies. Those are absolutely incredible. Today, we are going to talk about something that's a little off topic from real estate related stuff, but I'm going to tie it together. It's also a topic near and dear to me. It has to do with investing and increasing your rate of return cash flow, like money you get every month that's not earned income. So today we're talking about the 3 ways to increase your rate of return on money you have in savings. So one of the beauties of high interest rates is we are finally seeing a return on savings. So in my lifetime, interest rates on savings accounts has been well under 0.5%, basically non-existent. And that's one of the issues with low interest rates is they don't pay you any money to have savings, and the banks are keeping all of that money when they loan it out. So 3 ways to increase your returns without a lot of risk. And the number one way is a high yield savings account. These are ranging anywhere from, on the low end, 3.5%. I've seen some as high as 5.5%, and they typically come by way of internet banks, SoFi, Ally. My personal favorite is Robinhood. Robinhood is FDIC insured up to $2 million. And so you can put up to $2 million in Robinhood, and you will receive a rate of return of about 4.9% currently. You have to upgrade to the gold account. It costs $5 a month. But what's cool about this is if you park your savings in that account, every month you get an interest payment and you're earning income on money that's just sitting in the bank. What's this good for? If you're saving up to buy a home, I would put any savings you're putting together on a monthly basis into that account. So it's actually earning income as you're building up your savings to buy a house. We've talked about the beauty of compound interest before, and this is a great way to do that. Do your due diligence. These are FDIC insured, totally risk-free, unless, of course, a bank fails and you have more than $250,000. One of the cool things about Robinhood is they will take that money, say you even had $500,000, you park it in Robinhood, it's actually not in Robinhood, it's in multiple banks. And so that's how they protect you up to $2 million. The next way to get a high yield return is going to be treasuries. So every couple of days, treasuries are released, and the current rate on let's say a 10-year treasury is actually what dictates mortgage interest rates, but those rates have been as high as 5.5% and as low as 4%. They actually even have 4, 6, 8, 12-week T-bills where they pay different rates of return. So for example, about 2 days ago, I purchased a 4-week treasury at 5.1%. So this is a way that you can increase your interest rate on money that you might be willing to leave for 4 weeks or 6 weeks. This could be a good example of, like, you sold a home and you have a bunch of proceeds left over and you're not going to buy a house for a year. I would go on the hunt to try to see the highest interest rate I can get, but not lock that money up for any longer than a year. Number 3, this is a little riskier, but most of your brokerage accounts like Schwab, TD Ameritrade, you can go in and you can actually look at the bond market. A lot of people talk about the stock market, but the bond market's actually many, many times bigger and greater than the stock market in terms of money. So what's interesting is you can buy like corporate bonds, municipal bonds, which are tax-free federally, and you can get federal bonds, which are T-bills, things like that. And it's pretty crazy once you start doing some research on these bonds, but you can get interest rates far exceeding 6%, sometimes even 10% or 12%. Again, I would consult a financial advisor on this, but many of those bonds are pretty safe. It's like Chase Bank needs $200 million and they're offering 6.2% for a 12-month bond, right? And so this is a great way to earn income. And the key is, you should always have your 3 months of reserves. Like that should not go into a bond that's locked up for a year. That can go into a Robinhood account or something that you can withdraw immediately. But anything beyond that, you should be seeking ways to increase your income without having to work. So this is my short tip. I'm not a registered financial advisor. I'm just trying to share with you some great things that I have learned that have helped me. These are the 3 ways to take your savings, whether you're buying a house or you have sold a house, and increase your income from those savings. Again, we're having our Thanksgiving Pie Day coming up in a week or so. Make sure you register for that. As always, if you're considering buying a home, reach out to us at homesbyelevate.com, or if you're just interested in getting the instant value of what you can sell your home for today, just click the link. As always, thank you so much.